I find that so interesting, Todd, and I want to focus on the specific type of products. And I think there's a lot we can understand from the investor of where the flows are coming from. For example, I know a lot of those leveraged products that have been day traded might be misunderstood from an education perspective. So that would tell me if there's a lot of flows there, that might be a risk-on type of mentality or that trading type of mentality. Whereas on the other hand, I noticed you mentioned a lot of the active income ETFs, perhaps using option strategies, which give me an indicative of a different type of trader that's more long-term and income-oriented. Do you have any insight onto the flows there or information that retail investors could utilize?
Yeah, so the risk-on leverage products, Direxion is one of the leaders within that space. They and ProShares have a long history of offering products, and they continue to build out that lineup of leverage products, either single security or industry-oriented products. Whereas we're seeing more of the risk off. Firms like Calamos and Innovator are a couple of the firms that are newer to offering ETFs that are using options to protect the downside of a portfolio. And then you mentioned income. So JP Morgan's products are the largest within that space, but we have firms like NEOS that is a specialist within the options-based ETF world that offers products like SPYI that offers extra income tied to the S&P 500. So there's lots of different ways to be able to add risk if you're comfortable with that, or to protect the downside and generate additional income using ETFs.